Welcome to Aurobindo Pharma Q3 FY24 earnings call. Please note that all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks. Please note that this conference is being recorded. I now hand the conference over to the management for opening remarks. Thank you, and over to you, sir.
Thank you, Mandit. Good morning and a warm welcome to our third quarter FY24 earnings call. I am Srinivas Dange from the Investor Relations team. We hope you have received Q3 FY24 financials and the press release that was sent out on Saturday. These are also available on our website. I would now like to introduce my senior management team on the call with us today, represented by Dr. Satkarni Makapati, CEO of Aurobindo Biosimilars, Vaccines and Peptide Businesses and Director, Aurobindo Pharma Limited; Mr. Yugandhar Puvvala, CEO of Eugia Pharma Specialties Limited; Mr. Swami Iyer, CEO, Aurobindo Pharma USA; Mr. V. Muralidharan, President, Europe Formulations Business; and Mr. S. Subramanian, CFO. We will begin the call with the summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitations, statements relating to the implementation of strategic actions and other affirmations on our future business development, and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the development of our business, a number of risks, uncertainties, and other important factors may cause actual developments and results to vary materially from our expectations. Aurobindo Pharma undertakes no obligation to publicly revise any forward-looking statements to reflect in future events or circumstances. With that, I will hand over the call to Mr. S. Subramanian for the highlights. Over to you, sir.
Thank you, Srinivas. Good morning and a warm welcome to our Q3 FY24 earnings call. It has been yet another quarter with the highest ever sales. The sales growth was seen across multiple markets and businesses. This is further augmented by the highest ever EBITDA. Now let me take you through the details of the results for the third quarter of FY24 declared by the company. For Q3, the company registered a revenue of rupees 7,352 crores with an increase of 14.7% year-on-year. EBITDA margin for the quarter was at 21.8% against 19.4% for the last quarter. The net profit increased by 90.6% year-on-year and by 23.7% quarter-on-quarter to rupees 956 crores. The revenue of rupees 7,352 crores was impacted by a tax of 821 crore in Europe. Otherwise, the revenue would have been rupees 7,473 crores and EBITDA would have been rupees 1,722 crores, i.e. 23% margin. In terms of the business segments, formulation business excluding year-on-year and contributed around 85.6% of the API business contributed around 13.9%, during a growth of 7.1% year-on-year basis. The growth is mainly driven by higher volumes on account of improved asset utilization and debottlenecking. Albeit the decline was most
Subbu sir, your voice is not audible.
The quarter-on-quarter decline was mostly on account of business restructuring impact. He is transferring the API business from for the quarter, the revenue from the retail business increased by 28.9% year-on-year to rupees 3,756 crores. On a constant currency basis, US revenue increased by 27.1% year-on-year to $451 million. The growth was mainly driven by volume gains, stable demand, and new product launches. Our wide range approved basket has helped us optimally manage the price erosion, which remained neutral. We have received final approval for 16 ANDAs and launched 21 products in Q3 FY24. We have filed 7 ANDAs during the quarter. Revenue from oral generic products in USA has increased by 22.4% year-on-year to $287 million in Q3 FY24. Revenue from injectable and specialty business increased by 58% year-on-year to $112 million. The year-on-year growth was driven by new product launches. The total injectable and specialty sales globally increased by 46.8% and stood at $150 million. We have a total 216 injectable and specialty ANDA filings as on 31st December 23, out of which 164 have received final approval and the remaining 52 are under review or have tentative approval. The company on 31st December 23 has 820 ANDAs filed with the US FDA on a cumulative basis, out of which 641 have final approval and 31 have tentative approval, including 6 ANDAs which are tentatively approved under PEPFAR and the remaining 148 ANDAs are under review. For the quarter, US formulation clocked a revenue of rupees 1,728 crores, an increase of 1.6% year-on-year growth. In constant currency terms, the Europe revenue was euro 193 million against 203 million of last year. The revenue was impacted by clawback tax. For the quarter, growth market revenue was 25.6% year-on-year to rupees 627 crores. In US dollar terms, the revenue grew by 75 million in Q3 FY24 from $61 million in previous year Q3. For the quarter, ARV business revenue declined by 28.6% year-on-year to 179 crore or $22 million. The drop in the revenue in this quarter is mainly due to sales deferment to Q4 in compliance with Ind AS 115. During the quarter, the revenue cost have improved further, aiding our gross contribution stood at 4,201 crores. Gross margin for the quarter was higher at 57.1% against 55.2% of last quarter, mainly due to low raw material cost and favorable business product mix. R&D expenditure stood at 398 crores during the quarter, which is 5.4% of the revenue. During the current quarter, R&D expenditure was higher on account of the clinical trial expenses for multiple projects. Capital utilization has gone up well in this quarter during driving the operating leverage. Consequently, EBITDA improved to 1,601 crores, reflecting a margin of 21.8%. Net capex for the quarter was $103 million, which mainly includes approximately $37 million towards PLI project. The cumulative capex for the PNG project till December amounts to approximately $230 million. The average USD INR exchange rate is 83.24 against 82.68. The business had a net cash outflow of $7 million during the quarter before the PLI investments and investments in new markets. As a result, the net cash position, including investments at the end of December 23, was $49 million. The gross debt is $815 million. Subsequent events. US FDA inspections. Further to our intimation regarding the US FDA inspection of UGA Unit 3 dated February 2, we would like to provide the following updates. On February 2, FDA completed an on-site inspection of Unit 3 and issued a Form 483 with 9 observations. We will submit a comprehensive written response by FDA's deadline of February 26th. By way of abundant caution, the company temporarily paused manufacturing and distribution activities at the Unit 3 site. We have taken these aggressive measures because we believe it is the most responsible and appropriate course of action until we conduct investigation and assessment to give FDA assurance that we are addressing its observations. We are continuing to distribute terminally sterilized and ophthalmic products manufactured at Unit 3 that we have already shipped to US. We are working closely with FDA drug shortage staff, and we have retained third-party experts to assist us in conducting investigation, assessments, and restart activities. With the progress we have achieved today, we anticipate resuming production on our non-antiseptic lines around the end of the month, with a phased return to service on aseptic lines. Also, available stocks are being retested and progressive release of tested stock start from the second fortnight of February 24. We will continuously work with the US FDA, and we will work tirelessly to achieve and sustain compliance with the FDA requirements and expectations. My colleague will give further details on this in the Q&A. Outlook. Our financial performance in Q3 was driven by operational cost efficiency, with continued focus on developing strong pipeline and driving commercialization of key projects. Combined with positive business, we are confident of growing the growth trajectory across the top line and bottom line. Some of the key highlights for the forthcoming quarters are summarized below. In Q3, at an overall level, US continued to have neutral price erosion. Also, raw material costs continued to show reducing trend in Q3. We remain optimistic in Q4 in terms of the margins. While the growth in oral solids is expected to be strong, and we see positive signals in our OTC portfolio and steady continuity in branded oncology injectable business. My colleague Swami will discuss about it when addressing the Q&A. We are confident of achieving 20% EBITDA margin target set internally for the year, as mentioned in the previous quarter. Our new pipeline of approvals will include high margin new generation product categories, biosimilars and peptides, etc. We have the following under commissioning. The China plant is fully installed and we have received EU GMP approval. It is expected to start revenue generation from Q1, Q2, FY24. The Lyphus plant for Pen-G and the 6 API plant are under installation. The trials are underway. Operations are expected to start from Q1, FY25. The Vizag injectable plant is expected to commercial in Q1, Q2, FY25 growth markets. It is expected to start generating revenues for US and Europe by FY26. Further, we are conducting clinical trial studies for our biosimilar products, and the plant is expected to commission by FY25 or early FY26. Considering the current market condition, EBITDA margins are expected to improve Pen-G plant commercialization and stabilization of the manufacturing process. The expected margin improvement will be without considering the margin from biosimilar. Apart from that, we will be incurring capex for the CMO business in biosimilar. My colleague, Mr. Satkani, will provide more insights on the entire biosimilar and the other complex generic portfolio on this. This is all from my end. I take this opportunity to introduce Mr. V. Muralidharan, President, European Operations. He has been taking charge of Europe for the last 22 years and was instrumental in many M&A transactions in Europe. Welcome, Murali, for the earnings call. Now, my colleagues will give more clarity on any specific aspects in our Q&A session. We are happy to take your questions. Thank you.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask question may raise your hand from the participant tab on your screen. Participants are requested to use headphones or earphones while asking a questions. The first question is from Kunal Dhamesha.
Hi, good morning, and thank you for the opportunity. Am I audible?
Yes, Kunal.
Sure. So the first one on the plant inspection, the UGR3 plant inspection, I think I missed some of the comments. So as of now, we have shut down the majority of production is the way to understand it. And then within that, the non-aseptic lines are expected to come back in Feb. And then aseptic lines by the, I didn't get the deadline there. But if you could provide some, some color as to how many lines are aseptic lines and how many are non-aseptic lines, and also, qualitatively, if you can direct at the contribution to revenue, etc., would be helpful.
Yeah, your understanding is right. In fact, the non-aseptic lines will start off sometime in next few weeks, and aseptic lines will take a month or two. and we expect that entire production to get streamlined by end of this financial year. We expect that because of this stoppage, it can have an impact of around $20 million in Q4 of this financial year.
Okay. And when you say streamlined by the end of the financial year, is FY24 or FY25 year?
I'm talking about FY24.
FY24. Okay, sure. And then, the second question on the EBITDA margin, which you guided for 20% for this year, and then we have also said that Pen-G plant at current prices, etc., could help us improve that. Beyond that, what other levers do you see for the next year for the EBITDA margin improvement on a year-on-year basis?
See, at this stage, Kunal, we are talking about achieving 20% for the year. Already we are 19.4%, and by end of this with this quarter, we will touch upon 20%. That we are confident. Apart from Pen-G, at this stage, we are not saying anything at this stage. Probably next quarter we will be able to talk about it.
Sure. And just last one again on the UGR 3. Let's say we'll have some, do we have a lot of earnings concentration coming out of this plant? Like few of the products making up for a lot of our revenue. If yes, can you guide us to top 5 products from the plant? What could be the revenue contribution?
In general, this particular plant is important to us, and obviously now we are a bit more distributed in terms of plant concentration, with UGR 1 also contributing significantly. But for UGR business, this plant contributes to around 40% of revenue. And in fact, there are multiple products where we are market leaders in US, and that's where we are focusing in terms of how fast we can resolve and restart manufacturing.
Sure, thank you. I have more questions. I'll join back.
Thank you. The next question is from Neha Manpuria.
Yeah, thanks for taking my question. Just an extension on UGR UD3. You can, if I remember a few years back when we shut down the bag line, it took us a very long time. I'm not even sure if we are back to the impact that we had seen at that point due to the shutdown. Now, when we shut down the facility, for an extended period of time for the next 2-3 months, and the revenue loss that you're mentioning, what is the confidence of bring the $20-odd million numbers, particularly since we are not going to see new approvals till the time we clear this facility also?
In fact, Neha, thanks for asking this question, because see, the bag line issues might be different from the current observations. What we feel is the current observations are more to do with aseptic processing practices, some documentation gaps. And so we are confident that we are working with the most reputed consultants to ensure that we put the strongest response possible and also resolve the issues. That's where we feel that non-aseptic and aseptic, we are separating it out and ensuring that we start in a phased way, both the things. And our assessment at this point of time is this is going to take 1-2 months, and we will be back to in full flow from April. That is our current assessment, Neha. And
no,
yeah, go ahead.
Sorry, I understand that, but my point is that the $20 million impact that you've mentioned, right? So there is obviously risk of market share loss in some of the larger products from this facility. What gives you the confidence of us being able to get back market share if we lose that in the next, is that a scenario that we're penciling in at this point?
At this point of time, what we do have stocks to cover up for the next 60 to 90 days, and we feel in some of the big products we have enough coverage to take care of the market share. But if we lose, we will also gain, because these markets always give opportunities in terms of when you have 100 products, you lose in one and you gain in one. So in general, once we are back onto the full flow of production, we are expected to continue the similar run rate. There might be a $5 to $10 million gap on a quarterly level, but we are confident.
Understood. And based on the data that you've given on the pipeline, it seems like bulk of our injectable pipeline is from this unit. But just want to understand, the approval pipeline in the next 2 years. How much of that, pending 35, 40 ANDAs is from, is likely that we were building in for, let's say, 25, 26?
See, in 25, 26, anyway, we were not expecting any major approvals from this plant. And as you know, we are putting most of our new products into the Vizag plant because as a part of our de-risking strategy, we were always tech transferring and filing new products from a new plant because we also felt that we have put too many eggs in one plant. So we are just redistributing, and that's been going on for last 1.5 years. And from a 25, 26 perspective, we were not expecting any major approval from this plant.
Okay, and sorry to hop up on this, Yoginder. So where is our FY25, 26 growth going to come from for the UGR business, other than Revlimid, of course? From an injectable pipeline, where would that growth come from?
No, what we feel is that, yeah, you said it right. It's mainly going to come from Revlimid, but we were expecting around $30 to $40 million of new products revenue coming from balance of the plants, because as you know, we have total 5 plants, 4 commercial and 1 Vizag new plant. So we were expecting 50% of the revenue, new product revenue coming from the balance plant, and 50% new products revenue coming from this plant, which is out of the 40 million. Okay,
Got it.
so
okay, thank you so much.
Thank you. The next question is from Sharam Srinivasan.
Yeah, good morning, and thank you for taking my question. Just on the disclosures of the US business, right? I think last quarter, specialty and injectable were around 91 million, and now it's showing 112. I presume, is the majority of this coming from the Revlimid launch in the quarter?
frankly, like I'm not at a liberty to disclose as per our settlement terms with the innovator in terms of lenalidomide sales separately. But in general, yes, what you're saying is most of it is coming from lenalidomide.
Got it. And the 20 million, Uganda, that you're calling out, so we should assume that on the whatever the injectable part of the business, that's where the 20 million goes away in Q4. Correct, right?
That's right.
Got it. Understood. The second question for me is on the cash flow generation. So we had about 1,600 crores of EBITDA, but when I look at the slide 14, cash flow from business after working capital and others, it's about 45 million. So is there an adverse conversion cycle this quarter? Maybe 9-month numbers could be different. So if you could help us there.
Yeah, Shyam, this quarter we have made some of the creditor payments have been due across the group, and we have paid nearly around $75 million in terms of increased creditor over and above the gross current assets.
Subhusa, your voice is low. Can you sorry, can you please repeat?
So in terms of the creditors, right, during the quarter, our creditors payment is more than by the gross current asset generated, right, to the extent of 75 million. That is the reason why the drop in the cash flow vis-a-vis the cash pact.
Understood. Okay, so this is just a quarterly phenomenon you're saying. So
it's a
maybe
quarterly phenomenon, and the next quarter onwards, because now the creditors have come down less, and next quarter we will, if we sustain that, additional 75 million will get generated as part of the normal process.
got it. My last question is just, I think there's a slide on the biosimilar. So Dr. Satkani, if you could kind of walk us through the update for that on the biosimilar side. Thank you.
Yes, Shyam, good morning. So on the biosimilars, we have approval for trastuzumab, which is our anti-HER2 breast cancer drug in India. We have a SEC recommendation for marketing authorization. So we are closing down on the final nitty-gritties before we receive a marketing authorization to market in India. So that's the first approval from Curatech Biologics in the biosimilars business. With respect to the other programs, we have 3 filings done with European Medicines Agency, including trastuzumab. A spate of other filings with trastuzumab will also likely to follow in emerging markets, including that of the US in the next quarter. So that's an important update. Likely we have a couple of other filings made with MHRA and Health Canada. So I expect the programs that are filed with these regulatory agencies to go through the review process and materialize in the next financial year. With respect to the ongoing clinical trials, we have 2 programs, one in ophthalmology and one in oncology, 2 clinical trials happening globally. Both of them are progressing reasonably well. As updated in the last quarter, we also have initiated a phase 3 clinical trial of omalizumab biosimilar in Europe across multiple countries and sites there. As you know, omalizumab references Xolair, which is an injectable drug that targets and blocks immunoglobulin E. The product is approved for the treatment of adults and children with moderate to severe asthma and chronic spontaneous urticaria. The drug had a worldwide sales, I believe, of around 4.3 billion in 2023. So our biosimilar version of this product is already in phase 3 clinical trials, and we hope to complete the recruitment by October 2024 and submit it to both Europe and US in the Q2 or Q3 of the next financial year. It's an important drug for us, so hopefully we will be able to complete the clinical trials on time. Our second immunology biosimilar also has received a green light from the European Agency for conducting a phase 3 clinical study in osteoporosis patients. The study has actually begun this month. The study is being conducted across the European region in multiple sites. And the first patient was dosed in January, not this month, in January. We hope to complete the recruitment of all 450 plus subjects in an osteoporosis trial inside Q2 of this year, and hope to advance the product to filings in the second half of next year. So the reason why I bring this up is you can see from the wave 1 of products, which was essentially having an oncology focus, to a gradual and a nuanced shift into the immunology segment with these 2 key products with a current market opportunity of around $12.5 billion, making a shift into the immunology segment in what we aspire to achieve. Especially with the Xolair, the competition is very limited. And we also expect that there will be additional indications with Xolair in treating accidental food allergies. And hopefully, we believe this will have a longer product cycle. And even after biosimilars introduction, I expect the product to have a longer product cycle with newer indications and accidental food allergies being approved. And hence, we are reasonably excited and are aspirational about this product. So that's about the guidance on the 7 biosimilars. 3 of them, which concluded the trials and are in the filing phases, are already been filed with certain agencies, and 4 of them in global phase 3 trials. There is another immunology product that we are only developing for emerging markets and India, which we will complete the clinical trial in May this year, and I expect it to be filed with DCGI first and the other emerging markets by June, July this year. So, Shyam, does that answer your question?
Yeah, that's helpful. Dr. Satakarni, just one follow-up is on the opening remarks from Subbu sir on the CMO with MSD. So if you could give an update on that as well. Thank you.
Yes, I think in the last quarter, I mentioned that we have entered into a limited letter of intent with MSD Singapore entity, enabling us to become a contract manufacturing provider to MSD for one of their products. Under the terms of the agreement, Theranim Biologics, which is a wholly owned subsidiary of Aurobindo Pharma, will deliver CGMP batches of drug substance as well as drug product for supplies to MSD entity. We hope to start supplying from 27-28. To this effect, we are continuing to deliberate and engage with MSD entity on the terms of the definitive agreement, which I have stated in the last earnings call that we endeavor to close by the 31st of March 2024. So far, we are progressing in the right direction, and I believe we will be able to close the definitive agreement during this period. If there are any changes or extensions that I would take in terms of negotiating and closing and winding down this definitive agreement, I will provide an update in the next earnings call. But in a nutshell, it's progressing well, and we hope to close the definitive agreement pretty soon.
Got it. Thank you. Thank you and all the best.
Thank you.
Thank you. The next question is from Damayanti Kerai.
Hello. Hi, am I audible?
Yes, yes.
Okay, thank you. Good morning, all. My first question is again coming back to UGA 3. So, as we discussed, like you have been putting a lot of effort to bring the plant back to food production, but just want to understand, say, in case it takes longer, so do you have any backup plans for shifting some of the key products to other facilities? And if yes, then which will be key facilities where you will be transferring your product, apart from the new ones, which you said are filed from the Vizag unit?
Damayanti, in fact, the Vizag is built as a backup to UGA 3. So in case if that situation arises, we will try and tech transfer some of the key products to Vizag plant.
And just want to understand, are these injectable plants fungible in nature, or like you have to have different lines dedicated for some particular products?
No, we do have enough lines in Vizag. We have a footprint of 7 lines. And as I've been saying in the past, Vizag will act as a backup to UGA 3, also file new products from there. To some extent, it is fungible because most of the lines what we planned was based on the direction only.
Okay, but just want to understand, you said this Vizag plant will be ready for developed market some quarters down the line. So I just want to understand from immediate perspective, say in next 3 to 6 months, if you want to transfer some products, can you do that to Vizag, or it's like not possible?
Damayanti, it is a Vizag plant. We already filed 2 products to US from that plant, and we do expect inspection to happen anytime in next few quarters. And obviously, like normally, every tech transfer takes time to get approvals from the new plants. But at this point of time, I think we are speculating too much. I would prefer to, I think you need to give us time to respond to UGA 3 observations. Then we will see how it goes.
Sure, sir. That's helpful. My second question is on Revlimid. Obviously, you won't be commenting on the numbers, etc. But just want to understand from sales contribution perspective, will it be distributed across quarter, or you have some phase where you'll be supplying most in a year, and then in some quarters we won't be seeing much contribution coming in?
Our endeavor is just to definitely make it a quarterly run rate. But in sometimes what happens is, depending on the pricing and customer requests, we might end up billing a bit more in that particular quarter. But in general, it will be a distributed revenue across quarters. In case if in one quarter it is more, that will get knocked down in the next quarter. But our endeavor is just to space out every quarter. That is what we are planning to do. See, in general, UGA, we were doing around 100 million per quarter last year. This year, first 2 quarters, we were doing around 120, 130. And then now we are reaching a run rate of 150 odd million plus. So our endeavor is just that in next few quarters, we continue to maintain the run rate of $150 million plus.
Sure. And my last question is, due to this adverse geopolitical situations, Red Sea situation, etc., are you seeing any notable pickup in your logistic costs, etc.? Like in near term, should we expect operating cost will go up from current level?
I mean, the logistic cost as a percentage of the sales, total sales is very, very low. And at this point of time, we see a decrease in the EBITDA margin to the tune of around 0.1 to 0.2% at this particular point of time. So it is not very significant at this point.
Okay. As of now, as you said, it's very minuscule and no impact as such. Okay. Okay, sir. Thank you. I'll get back in queue.
Thank you. The next question is from Tushar Manu.
Am I audible?
Yes.
Thanks for the opportunity. Sir, first on this PLI scheme project, just would like to understand the pricing of PNG maybe pre-COVID and what could be the profitability if the price goes below $20 per kg.
Tushar, as I said, no, last quarter also, let us not speculate at this particular point of time. Our first objective is to complete the trial batches, start the business in the first quarter. And the second challenge we will be doing is how fast we are ramping it up. We think we should be able to ramp it up between Q1, Q2. And once the full ramp up happens, only the pricing issue will come really, because till the time the pricing issue will not come. So we don't need to worry about it for the next 2 quarters, in my view. The current price will continue, in my view.
But just from a sensitivity perspective, let's say, 3 quarters down the line when we start the external sales. So at that point of time, if at all you can elaborate what happens if the price goes below 20.
But sensitive modeling is your prerogative. How can I suggest that?
Okay. Just one clarification. Revlimid is from Unit 4, right? As in UGA Unit 3.
It's UGA 1, which got audited in the month of July 23, and we received 0 observations NII classification for that facility.
Fair point. And lastly, for FY25, given the circumstances for the UGA, if you could call out what could be the sales guidance to think about.
Okay, Tushar, I just mentioned it that we, in fact, this quarter, which is the quarter 3, we achieved $150 million of revenue for the quarter, and we expect to continue the similar run rate in going forward into the next quarters. But quarter 4 might have a slight impact. As I mentioned, it can have an impact of $20 million, but we will see how we can cover up that gap.
Thank you, sir. Thank you for addressing my questions.
Thank you. The next question is from B.
Hello. Am I audible?
Yes.
Hello. Yeah. Okay. All my questions mostly answered. Just one update on this product Rismuta, which you in-licensed from EY. Have you launched it in the US, and what are your targets like?
Sorry, we
What is
couldn't
the
hear
product?
which product.
This product, filgrastim product, Rismuta, which you in licensed
Okay.
recently from
Yeah, I'll
the
take that question.
Chinese
Yeah, I
company. Yeah.
understand. Yeah, so this product we are likely to launch in the second half of second quarter of this coming fiscal or second half of this calendar year.
Given that it's a BLA, would you need a sales force and all? How do you plan to sell it? And do you have any market share targets?
Yeah, we have market share. We have obviously budgeted for what we are going to sell. At this point, I don't think we'll be able to share that kind of sensitive information. But we believe there is a 7-player market, but we believe that we would also be one player, and we obviously it is going to be profitable for us. We hope to achieve a decent amount of sale, but it's too early to tell you about it.
But you're going to set up a sales force for this?
We already have Salesforce, and then wherever it's required, we'll augment. I don't believe we are having any major ramp up for it.
Okay, got it. Thank you.
Thank you. The next question is from Surya Patel.
Hello. Yeah, thanks for this opportunity, sir. My first question is on the same question on the previous question, basically the in-licensed molecule. So you indicated that second half of the current calendar year that you would be launching, but which are the market that you are initially talking about, sir? And do you see this as a kind of exact alternative for pegfilgrastim?
That is something I can't comment. We think that it is equivalent. It's a non-biosimilar product. So initially we'll be launching in the US. We have plans to launch eventually in other markets.
Starting with the US, or it is other than US market?
So the product is already existing in China, but we would be launching that. We are not marketing it in China, but we would be launching it first in the US.
Okay. And if you just add to its regulatory progress and the process there, sir, about that molecule.
We are confident of launching this product, and we had done the FDA had done the inspection in June 23. We already received the FDA approval for it on 16th November, I think, last year. And then our potential launch is 2024. The product is under manufacture, and we hope to, through a CMO, we hope to launch in July 24. We do not see any other hurdles at this point of time.
Okay. So considering the potential of the or size of the pegfilgrastim, this could be one of the largest product opportunity for near term. Is that fair?
That's something I'm not saying, because there are, like I said, there are 7 biosimilar companies in the US, and this is a new product. We will have a very conservative estimate of what we are going to do. But we think that economically it's a good product for us.
Okay. Sir, my just a second clarification about the US plant disposal, injectable plant. So while we have been of the view that there is larger significant demand in the injectable side, and we have a wider pipeline, and that's why we had created 2 facilities, one in US, one in Vizag. So US one was supposed to cater to the US increasing demand, while the other one for Europe and emerging market. So now at the just before this thing, so the disposal, what is the kind of thought process here?
I think Yugandhar should be answering this question. Yugandhar, you would like to take this?
Yeah. So I'll take it. No, in fact, Surya, like it is sometimes what happens is initially we thought Vizag will cater to emerging markets and Europe, but subsequently 2 years back itself, we changed the strategy of Vizag will also be backup to UGA3 and file new products from Vizag. So with the Vizag coming up and multiple lines being planned in Vizag, what we felt was US plant was becoming non-strategic and the capacities available were not sufficient to take care of the market share requirements of US business. So it is a strategic decision that we will take out US plant and focus on all India plants. But at the same time, the US plant will act as a contract manufacturer for us if needed, with all the 4 products. In fact, 2 products we filed from that facility, 2 more products we are planning to file from that facility. And in case if there is a future need, the contract manufacturing option is available.
Okay. My third question is on the European business front. In fact, see, we have been saying that the European business has obviously seen margin profile beyond 15% since last couple of quarters. So, given the kind of shortage situation, improved pricing scenario for generics even in Europe, so what is the kind of a margin profile of that business currently? That is one. And second question relating to Europe is that the European Union recently has come out with a large basket of product, more than 200, which are critical for their requirement, and they are expecting to create a kind of safety inventory, and that's why the procurement is likely to starting this January. So if I see that presence of Indian players in Europe, then obviously Aurobindo is the largest. So what would be our scope in that, and what benefit that you anticipate there?
Yeah, I would request Murli to talk about the second point so that I can talk about the margin profile after that. Okay.
Okay. So, Surya and all, happy to be part of this call. So, coming to your question on the safety inventory advocated by EMA. Yes, we are analyzing, or we have analyzed that list. We are also taking care to ramp up the inventory parts, APIs and components to supply in sufficient quantities into Europe. And other than this, also all the regulators or several regulators in European, our footprint countries, do ask for certain safety net, and we are working on it.
Is it a sizable opportunity, sir, since it is a 300, means a 210 to 20 odd product basket?
Yeah, it is almost 30% of the list or in the Aurobindo list of products. So it is a sizable opportunity.
Okay. Yeah.
Yeah. So Surya, in terms of the margin, we never given the margin profile of Europe, right? But having said that, we were earlier around 10 to 11%, and certainly we moved up by 2-3 percentage points already. And with the growth we have been targeting, with the way cost structures have been looked at it, certainly we will make an attempt to touch upon the 15% plus.
Okay. And just lastly, any update on the pneumococcal vaccine supply opportunity, sir?
Yes, Surya, Satkarni here. On the pneumococcal vaccine, I have given an update, I think 2 earnings calls ago, that we received a SEC recommendation based on a 3+0 dosing regimen trial that we concluded in about 1,100 infants. So we did not meet the timelines of the immunization tender. So we were not, I was not keen because we still had the manufacturing license to obtain and all. So naturally, we couldn't become part of the immunization tender that was floated, the national tender. That time has passed. Now, During this period, we have conducted a 2+1 dosing regimen trial, which means the infants are given 2 doses, followed by a booster dose 6 to 9 months later. Now that trial was completed, and we submitted the findings of the trial to the SCC committee only last month. In the private and retail market, we don't have any presence there, which is an area that I would not like to enter at this point of time, because we wanted to generate more data to take the product to the WHO markets in 2026. It is the immunization tender that probably is of interest to us, but we have passed that last year, and I will keep you posted in case there is a strategic shift in what I think for the next tender cycle. At this point of time, in the next 2 to 3 quarters, I don't see us putting this product out in the market.
Okay, sure, sir. Yeah, thank you. Wish you all the best.
Thank you.
Vandit, you are on mute.
The next question is from Smith.
Hello. Am I audible?
Yes.
Thank you for the opportunity. My question is on US generics. How was the pricing environment in Q3 for injectable products?
It was a low single digit price erosion.
Is it Q on Q or YOY?
It's Q on Q.
Okay, thank you.
Thank you. The next question is from Kiran Shah. Hi, Kiran, you are on mute. Okay, we move on to the next question. The next question is from Tarang Agarwal.
Hi, good morning. Am I audible?
Yeah, Tarang.
Right. Okay, a couple of questions starting on Europe. If I were to adjust for the tax clawback, you're at about 206 million euros. How should we look at this business going forward here? Is 200 million euros the new base for this business? Number one. And number two, in your response to an earlier participant, you commented, you gave a metric, you said 30% of those 200 odd products. If you could elaborate in terms of what that 30% was.
Murali?
Yeah, Tarang. So when I say 30% in the list of INNs that have been identified as potential shortage items, and that the manufacturers have to potentially ramp up the inventory. And also, we know in terms of the number, this much will come. It's not based on value or other quantifications at this moment. But again, we have communicated to our country teams to very closely look at these products and do the needful on the demand forecasting and purchase orders. And similarly, India team are also aware of it. So I hope this answers your first question. And relating to the clawback, Subbu, would you like to comment, or can I continue to?
No, he is talking about whether this is going to be the new base against 206 of adjusted revenue for the quarter. What is
Tarang?
Murali?
Yeah, Tarang's question was also whether are we looking at this 200 million plus? Yeah, I hope I'm audible. Tarang's question was also whether are we going to clock this 200 million plus Q on Q. And Tarang, yes, we will be doing that for sure. That is the objective. And of course, in this quarter, because of the almost close to 14 million clawback, it slightly impacted our Q3 revenues.
Sure, thank you. On the ROW markets, if you could elaborate into, I mean, there's been a solid growth, about 25% odd in INR terms in this business. Any specific markets which are driving them? Is it one-off, or the 625 crore quarterly run rate is something that we should work with moving on?
Yeah, Tarang, ROW market, as per us, is comprised of growth market. We call it growth market, comprised of multiple countries, like including Canada, Brazil, South Africa, and China, and many markets, right? And we have been growing in all the markets, at least 1 million, 2 million, like that. We have been growing, and it is expected to continue. Especially China was not a player in the past, and now they started contributing something, which we said no, we'll be doing single digit. Now we are talking about moving to at least 10 to 20 million dollars in a year time. And once the plant is commercialized, say in Q2, it can go up only, right? So this is where we are on the growth markets.
Got it. And my last question on the US, Mr. Swami, if you could give us a sense on the outlook for the oral solids business. Do things remain where they were, say, in Q2, or are you seeing an improvement in outlook or deterioration in outlook?
Yeah, we expect the strong momentum to continue, underpinned by new product launches and surging volumes. We had taken a strategic decision to adopt a volume-based plan to enhance our footprint. While the growth in oral solids is expected to be strong, we also see some positive signals in our OTC portfolio and steady continuity in the branded oncology injectable business. Overall, we are looking at decent growth going forward.
Okay, thank you. All the best.
Thank you. The next question is from Kunal Dhamesha.
Thank you for the opportunity again. Just one on the UGR3, since we have now added a third-party consultant, etc. Any view on the remediation cost we could have for the next year? And more related to UGR3 again. So we are expecting this probably 20 million impact on revenue. But will there be any non-supply penalty, since we are basically one of the biggest supplier to the US market? So have you kind of factored in that as well?
Yeah, we expect $2 to $3 million in the coming few months with respect to the third-party consultants working with us. And we did evaluate in terms of what can be the penalties part of it. At this point of time, the way we think, it might not be significant. But in case if anything changes, I'll let you know.
Sure. And just on this clawback tax on Europe, this 13.5 million would have, the complete amount would have impacted our EBITDA negatively, is the way to think about it?
Yes, you are right.
Okay, perfect. Thank you and all the best.
Thank you. The next question is from Nitin Agarwal.
Nitin?
Hello, so can you hear me? Yeah. So my question is two things. One is one on the biosimilar business. Mr. Satkani has given us a sense on the pipeline, but if you can give us some more color on how should we see the commercialization part of the biosimilar business over the next 3 to 4 years, and sort of which geographies do you anticipate where the revenues commercialization will start earlier, and what kind of salience can this business really have in the overall scheme of things, say 3 to 5 years down the line for us?
Nitin, that's a good question. So with the trastuzumab SEC recommendation this year, we would hope to commercialize trastuzumab in the Indian market in the next quarter or two. That's the start of commercialization phase for this breast cancer drug. Now, with the 3 filings in regulated markets across Europe, Canada, MHRA, we expect these 3 filings to translate into regulatory approvals also towards the end of next fiscal year, which means that we would also begin the commercialization phase of these products in the next 4 to 5 quarters' time. Now, with 4 more products in clinical trials, especially the big ones, which is the Xolair biosimilar with limited competition, and the second immunology asset that recently advanced to phase 3 clinical trial, which is a Prolia biosimilar denosumab. Both of them will be filed in 2025 in Europe and other regulated markets, including the US, which provides us an opportunity to get into commercial phase in the following year, which is the calendar year 2026. So while I'm not a great fan of giving projections to what could be the size of the business, with 7 products, out of which 3 of them probably get to approvals in the US before 2026, and at least 3 to 4 of them in Europe, and the filings with emerging markets are going to happen with trastuzumab and other programs. I see 2026 as an inflection point for this business. For the hard yards that have been put in and the investment prudence that we have followed in shepherding these products through nuanced clinical trials over the last 3 to 4 years, I see 2026 should be the year from where a significant chunk of commercial opportunity or commercial revenues will start to come in. Now, with Xolair, I expect by 28 we would be around $120 to $180 million US, provided we will be able to get approvals both in US and Europe, and another 20 million from the rest of the world. So this is one product that I can give guidance about because there is limited competition. The other products, we are entering into a market which is already slightly formed. So we know where we are getting in there. We really need to test the market. But the guidance after 5 years for Xolair would be anywhere between 120 to 180 million, 120 million in the worst case and 180 million in the best case scenario, with another 20 million coming out from the rest of the world markets. The most important thing to underscore here, Nitin, is the margin base that will increase with the introduction of biosimilars in the regulated markets. So that's something which we are excited about 4 to 5 years from now, and see how our efforts in investing as a company into differentiated portfolio, of which biosimilars is significant, will translate into benefits and increased margins for Aurobindo as a whole. Does that answer your question?
No, that's very helpful. If I can just probably push one point on taking reference from what you mentioned earlier. Yeah. As you mentioned, barring Xolair, most of the other products we are probably going to be entering late after market formation. I mean, given the way dynamics in biosimilars have played out in Europe and the US, I mean, what is your assessment in terms of what is our capability, what is our right to win even after we enter so late, in most of these products, going forward? So that's an interesting perspective. Now, in the first wave of products where we are already entering a formed market, a formed market is in a sense where biosimilars have already formed the market. There is a price erosion that has already happened. For example, if you look at a trastuzumab, I don't think it is going to erode further. In fact, the market started to pick up now because the outreach and availability of this biosimilar for multiple other patients, or the patient base is increasing. So when you enter a formed market, you make educated decisions. You say, okay, you have a price erosion of around 85% or 80% already in certain markets. So do I have the cost of goods to enter and still make a 80-85% gross margin?
So only when we think we can enter a market which is already formed, and if there is a further price erosion of 20-30%, still we can make around 80 to 85% gross margin. Only then we are entering into those markets and entering into those products and developing those products. So we are sure, while we are slightly late in certain products, with denosumab, we will not be very late. With denosumab, we will be in the first and second wave of launches with denosumab. With the first wave of products, it is a very strategic decision that we will enter into a low risk, an already formed market, a low risk both in terms of the market as well as in terms of the IP risks, and we will test our results. So, for example, in Europe, with so much price erosion we see with these products, I can safely tell you with the cost of goods that I'm having, I will still have a 85% margin base, gross margin.
Right. And sir, fair to assume that across all of these markets, we would be leveraging our existing field forces to push these products. We would not be requiring additional SG&A investments in any meaningful way.
That's wishful thinking. That's wishful thinking. For example, in Europe, we already have a field force, and we will continue to engage with them, and we will utilize that workforce. In US, Acrotech will become the arm for biosimilars commercialization. As you know, as Swami has alluded to before, where there is a requirement, we already have a certain base there, but where there is a requirement, we are augmenting our field force depending on the nature of the products that we are going to launch. And to answer one of your colleagues' question before on the FC fused filgrastim that we are going to launch in US. So there is already going to be a field force in the oncology segment there when we put out products also in that market. So we'll be using the same field force plus augment it, because the nature of biosimilars marketing is slightly different and still requires some sort of marketing. So it will not be a grounds up building or constructing a field force there or nurturing a field force there. We will leverage on what we have plus augment it with the skills and skills that are required to take these products to their commercial success.
Got it. Thanks. That's very useful. If I can squeeze in probably one more. So on the Chinese plant, which you're talking about getting commissioned by Q2, so what is the strategy for this plant? Is this going to be largely for Chinese consumption, or are we looking at it as a base for other reg markets? I mean, and if you can probably just highlight the thought process behind this Chinese manufacturing assets.
Yeah, Nitin, what we are trying to do is, this is originally, we are planning to do it for Europe and China. Europe, we will be launching it, will act as a, product supply for Europe immediately. I think the Chinese approval, the approval from the Chinese regulators may take Q2 or Q3 of this next fiscal year. Then we will be supplying to China also. At this particular point of time, we are not saying US. US will take at least 1 to 1.5 years because the inspection to be triggered and approval to come, etc. But as a whole, we'll be using the plant to supply all the markets.
And so this is orals plant, or there are other lines also beyond the orals?
This is only oral plant, OSD.
Okay. Okay. And sir, if I can take one last one on the inhalers, sir, we had some products in the pipeline. Any color on their commercialization schedules?
Tommy?
Yeah. So you're talking about the BFS products, or you're talking about the DPA-MDI kind of products?
So the DPA-MDI products. And if the other one also, if you can touch upon.
So, the DPA-MDI, we have a product that's under development. We have a query on it, and then our team is responding to it. That would take some time. And I think there are some legal issues too in launching that product. So that's definitely going to take some time. As far as the BFS is concerned, Subbu mentioned in his starting remarks saying that one of our joint ventures is going to start manufacturing. So we hope to have some news in the early part of fiscal 25 on the manufacturing and commercial sale of some of the BFS products.
Okay, sir. Thank you so much.
Thank you. The last question is from Jigar Walia.
Hello. Hi, thank you for the opportunity. My first question is for the products approvals, seven we have received from the injectable side. How many would be from UGA 3?
Sorry, most of it is from UGA 3, and except one product, most of it is from UGA 3.
Got it. Second question, your perspective around the generic prices in the US market, particularly in the around the current times?
We expect that at least on the specialties and injectable side, we expect a low single digit going forward into the next quarters.
Got it. Broadly, is there any concerns, particularly from the US market, with regards to China sourcing imports or generally China origination?
And I don't see much of an impact, but that Swami can comment on it.
Yeah.
Subbu, would you like to comment on
Yeah,
this?
I will do that, and Swami will supplement it. We recently got it. We don't have any. Recently, there was a report released, and we have gone through the report. And first of all, we'd like to state upfront, no, that we only buy from the US approved or acceptable vendors who has been with us for a long time, right? And we are not aware of the basic source of the report because we are seeing certain discrepancies actually. First of all, the first point I'd like to say is, first of all, the report talks about we have been selling valsartan. We are not selling valsartan in the last 4 years. In fact, the other way, one of the suppliers mentioned in the report is supplying that, and he is having a market of around $1.5 billion actually. So we are not clear about what is the source, and we also try to find out, is there a sanction list of the suppliers or is there any this one, we are not able to find out. Having said that, no, even if you really see the procurement from the suppliers in the list, right, given in the report, it is very insignificant. It is less than, it's a low single digit type, right? So we are not seeing any concern, etc., from procurement of material from the China or any other thing. And one of the product is also which once we get into PG also know that percentage may also come down. So we want to assure all our stakeholders that we are fully committed to upholding the highest standards on what we do, including the procurement, quality, everything. Okay.
Thank you very much, sir. Thank you. And best wishes for the everyone. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing remarks.
Thank you all for joining us on the call today. We apologize for the mic and line related issues at the beginning of the call. If you have any of your questions unanswered, please feel free to keep in touch with the investor relations team. The transcript of this call will be uploaded on our website www.aurobindo.com in due course. Thank you and have a great day.
On behalf of Aurobindo Pharma, that concludes this conference. Thank you for joining us, and you may now disconnect your line and exit the webinar.